Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, greatly helps the channel. So, quite a lot of things happened this week. Another difficult, turbulent week for the markets. However, we are seeing the things that we wanted. The bond market keeps on rising, which means yields in general are coming down. The dollar has pretty much closed the week below 104, which is very important. And as I've mentioned in my previous video, in order to loosen financial conditions, in order to stimulate the economy, you don't need the Fed to actually do anything. You need the dollar and the bond market to help you. Obviously, the Fed not saying stuff like we may increase rates or saying stuff like we may remain hawkish or we don't see any reason to lower rates in the next 3 years, something like that. Anything that is not like that is helpful. Obviously, the forward statements are more important than the short-term actions that they may take. Now, a few things have happened through the week. A lot of them have not been caught by the public eye because essentially prices are down. So that's the thing that matters the most. So what we are seeing is the result of the very strong tightening of financial conditions back in November and December, when the bond market dropped quite a bit, making actually another low, if I'm not mistaken, with yields spiking very aggressively and the dollar approaching 110, which is very, very high. So now we are substantially below that, which is good, but we know that there's always this couple of months lag between the easing of financial conditions and the action of prices. So in a few months, in 1 or 2 months, potentially starting next week, we're going to start markets to recover. People won't believe it because now they are tilted towards the bearish side. And then in a month or so, it will become very obvious that we are back on track, and basically then we'll try to find reasons why, basically, how is this possible? The market's going up. It must be A, B, C, and D. It's always the same story. So yeah, today I wanted to give you this example from the news, because as I've told you before, the news just reflects whatever is in the chart. So today on CNBC, I've talked about this before, right? So today we have a practical live example of what I always been talking about. So CNBC writes something like, markets keep on bleeding, or markets keep on falling due to tariff fears, and even the concessions on tariffs are not good enough. But by the end of the day, we hit very crucial support around the 200-day moving average, which is a very important average for the major indices, and we basically turned back and we actually finished the day green. So what happened, CNBC? Did those tariff fears go away in an afternoon? Are now they more convinced of the concessions despite no talk about it whatsoever? So which one is it? No, we sold off into major support areas and we hit support and bounced. That's it. But you see, that doesn't sell. So we need to, okay, the market is red, we need to justify with a piece of news. The market is green, we need to justify with another piece of news. That's my point. It's all short-term noise. It's all driven by liquidity. That's all that matters, is more currency units chasing the same financial assets. Now, I've discussed this in the past. I said, I get the feeling that because China needs to stimulate the economy like there's no tomorrow. But the problem was the dollar was too strong, which means if they start stimulating, they will probably lose the currency peg to the dollar. So I said, Trump will give China a lower dollar and allow them to stimulate. What did China announce this week on the back of a lower dollar? The biggest stimulus program of all time that they had. Who is surprised? Not the people that follow the channel. Those have been waiting for this for a long time. What was the trade-off? maybe allowing Taiwan to invest $100 billion in the US, giving the US very strong chip manufacturing capabilities. Was that the trade-off? You see, you cannot pay attention to what an ambassador or to what a, I don't know, spokesperson for a party says in social media or to the news. It's all theater. It's all like watching wrestling. It's just a character. You see, how many times do you see Europe is very much aligned on the side of whatever, and then within 24 hours they are disagreeing? Or we don't need the US and we're gonna fight the US like there's no tomorrow, and within a week they are signing a very important deal. Or we're gonna slam massive sanctions on a certain country, talked about by Trump today. And I get the feeling that in a couple of weeks, everything is fine and everybody is happy. You need to see what they do, know what they say. That's the key. So there's a threat to the US by China. So the US puts in the tariffs, China retaliates, and there's then some back and forth, quite nasty. Yet China can now stimulate on the back of very much lower dollar, and all of a sudden it's okay for Taiwan to invest $100 billion in a crucial strategic industry in the US. These things, in my opinion, don't happen in vacuum. They don't happen without a very important linkage. Now, here is the thing. 2017 was driven mostly by Chinese liquidity. Once again, we are back to Chinese liquidity driving the global liquidity market. Another important thing, ECB has cut rates again in Europe. Who is surprised in this channel? Nobody. Germany announced a massive spending program for defense and infrastructure, and basically they will have massive budget deficits. What are the type of liquidities that we talk here in the channel? Either you have the central bank with pushing lower rates and doing QE, or you have budget deficit spending, which is what the US has been doing in the past couple of years, same as France, etc. Both of them create liquidity. Now, what's happening in Europe at the moment with the major economies is that both things are going at the same time. So you have massive budget deficits, even by historically prudent governments like the German one, together with the ECB bringing rates down and having a little bit of a backdoor QE kind of program going around. Now the Fed will also stop doing QT. Powell just said that it's now time for them to revise their economic models and to make policy adjustments for the future. I wouldn't be surprised if they come out and say, actually, in the new economy, 3% inflation is actually quite good, so we are happy with it. Or something to the nature of, we will cut rates more than people think. Now you insert whatever's going to be the excuse in that new analysis that will cause this, but you can bet, or I think it's a very safe bet, that somewhere or another it's going to be something that will allow them to do what they want. And they will stop QT, which is very good, as I've mentioned. And you have China and Europe pushing now liquidity like crazy, particularly China, which is very resembling of 2017. So that part is good. And as I've said, we've experienced, I think, probably the worst of the tightening of financial conditions back later in the year of last year. And we now should experience it's been a very quick loosening of financial conditions. As I've said, you don't need the Fed to necessarily do QE and print money if the bond market and the dollar can do that for you. Now, an important item also to pay attention. The fear that tariffs will be very inflationary. Now, this is not a new fear. The same fear popped up, guess what, back in 2016-17, same story. Now, the question that I ask you is this. China is one of the countries with the highest tariffs. They're fighting deflation and very low inflation. India's inflation has been coming down steadily, and it's now slightly above certain countries in Europe, yet they have probably the most protectionist tariff regime in the world. So why don't you pose the questions on that side? Tariffs will be inflationary depending on many factors. It's very difficult to say because it can just create, it can really be inflationary if it's mostly at raw input materials. If it's products itself, usually what ends up happening is people just get away from it. So they just buy something else. That's typically how it goes. If it becomes too expensive, they just substitute it, or they just buy less of it. When it's really raw inputs that you cannot easily get someplace else, that's where you can have some inflationary pressures. But if tariffs cause the fear that the economy is going to slow down, then the price of those inputs will come down in any case because of fear of recession, which will kind of balance out the tariffs. So my point being, it's not easy to answer that question, but the way that economists talk about it is like, oh, it's so obvious it's going to create inflation. Really? Then why China doesn't have any inflation and have so many tariffs? This is the problem, right? When you try to paint everything with the brush, with the same brush, everything is the same. This is what you get. Then another piece of very important news. Bitcoin strategic reserve has been created, mostly with, or it's going to be with confiscated Bitcoin. So meaning, I think 200k Bitcoin that has been in the possession of the government, plus they can theoretically acquire Bitcoin. At least this is how the executive order looks like, but please feel free to say in the comment section if you disagree, which is, as long as it's budget neutral, so let's say you can swap gold for Bitcoin, in theory you could do it as long as it doesn't require spending of money, because that needs to be approved by Congress. Now, this has always been the situation. So what happened yesterday or 2 days ago was this. You got the US president creating and committing not to sell existing Bitcoin, which the government has been doing in the past. Basically creating a big reserve starting at 200k today, while other nations have zero. So South Korea has been rumored to about to do the same. China and Russia rumored about to do the same. Now you are creating the need of other countries to do it if they believe there's a 5% chance that even if they hate crypto, what if the US is right? So that's the game theory that has been created. Number two, you have now a country that used to be completely against crypto, now completely in favor. We removed a big selling pressure factor. We also don't need to get ourselves concerned anymore about outlawing crypto, which was a very possible reality just a few months ago. So it is overall very bullish, particularly in the long term. But the issue that we have in the short term is that people create these ideas that for some reason Trump can just take $1 trillion and just buy Bitcoin. I don't know where people get this information, how they think that the governments work. You cannot just do that. But not forget about crypto. It's not just crypto. It's about also other stuff. You can just go and approve. My God, can you imagine if a president had that kind of power to approve by himself or by herself $10 trillion in spending on some random stuff? That means that one or two stupid ideas could destroy the entire country of the US. That's not how it works. So, but unfortunately, you have this situation in which people build up these expectations and then they pay a price. And then they get very confused of why they're paying the price and they don't get it. That's it. Now, I'm just going to put something into perspective, right? Everyone is talking about a stock market crash, which is quite funny to me. And then they use Tesla as an example. Oh my God, Tesla is so much down, is so much down. Tesla is like up 45% on the year. 45% on the year. Tesla is up like 400 or 500% in the last 5 years. That's an average return of like 94% or 90% per year, which, by the way, it's higher than Bitcoin in the same time span. Can you imagine having a stock that returns on average 90% per year? And people are in panic because it dropped 30 or 35%. This is the world where we live now. It's like everything is so short term, like the last 2 months that matter, the last month, the last 3 months. Anything beyond 6 months is like an eternity. Chill. Sometimes zoom out if you are in doubt. And you don't need to panic like crazy. Financial conditions tightened incredibly in late 2024. And they've loosened by more than they were at the time. Plus, you have huge amounts of liquidity coming into the market from China and Europe, and you have the US stopping to dump treasuries on the market, and the dollar falling. By the way, is the dollar going to fall forever in a straight line? I don't think so. I think there's going to be bounces, but the global overall strategy is down. Where did I see this movie before? Where rates went up, dollar went up in the short term. Everybody was afraid of tariffs because they're going to be inflationary. And then rates came down, the dollar came down, and the tariffs ended up not being so bad. Oh yeah, I remember, it was 2017. Who was the president? Oh, same person. Weird. So I'm very curious to see what people's going to say, the stock market crash predictors and the Bitcoin bear market predictors, because those are also out there. I want to see what they're going to say in the next month or so when they really start bouncing back aggressively. Let's see. Maybe they will delete their posts and tweets and videos. Who knows? And with that, thank you very much, guys. Try to enjoy your weekend. I'm a little bit tired today. You may notice in my voice. It's been a pleasure. Thank you very much for following the channel. Don't forget to like and subscribe, and I'll catch you in the next one.